Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and I got a very special guest with me today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. I really wanted to talk with Dave today specifically. It's 4 o'clock after the close because we've seen a correction in gold and mining stocks play out since July, and it really sped up last week. Gold fell below $1,800 an ounce. On Monday on Twitter, I saw a call from someone that has a massive following on Twitter and on YouTube saying that he sold all Bitcoin he sold all the gold he owned and moved it into Bitcoin. And a lot of people were emailing me worried about this, and it's just, but today gold went up quite substantially. The mining stocks had a really good day too. So the big question is this the turnaround? Or is this a false dawn, and this is just a chance to get out and buy Bitcoin again? What do you think, Dave?
I think actually there's a lot of evidence that a lot of people that are traders on this, because we've seen this consolidation in gold since the summer, and Bitcoin has kind of been headed higher with the stock market this summer, that, a lot of people kind of near the end of this correction in gold were actually selling precious metals and buying Bitcoin and cryptocurrencies. And it's kind of like a similar kind of mindset in both of those arenas. Now, me and you are more gold and precious metal guys, obviously, than we are coin guys. But a lot of both parties tend to think that their investment is going to go higher because of government money printing and devaluation of fiat currencies, etc. But see, my opinion is the issue I have with cryptocurrencies, especially Bitcoin, is store of wealth or contrarian investment. Because if you look at 2017, you look at the last 6 months, it rips higher when the stock market is ripping higher, essentially, right? So it's not really a hedge. To me, it's just another speculation. And near the end of these rallies, when things kind of get really, really frothy, it moves higher. So I think it's almost a reflection of these frothy financial markets. So that, when people, my connection's not the best right now, I'm sorry. But anyhow, so people can agree with me or disagree with me if they want, but that's what I kind of feel.
Well, I was telling you, I saw a comment William Fleckenstein made. I subscribe to his service, and he does questions and answers. And someone asked him, why doesn't he buy Bitcoin? And he came back and he said, because he doesn't believe in it as a long-term investment. Like he can accept that it might go up for a couple of weeks or a couple of months or even a year, but as something that he believes in as an investment, he doesn't. So he was saying that because of that, he wouldn't be able to hold it. Like he knows if he just bought it and it fell, which it does all the time, and then goes back up, he would just get shaken out. Whereas if you believe in something, it's much easier to hold. And you can buy, stocks that pay good dividends, or when it comes to mining stocks that are still cheap and have good properties and prospects and so forth. And it's a lot easier for me to hold something I believe in than some strange cryptocurrency that just gyrates, 10% up or down in a day.
Yeah, just so you know, I turned my video off because for whatever reason my connection is not the greatest right now, so that will help me from cutting out. Yeah. So no, I agree with that because I think I've had that problem myself that I have because I am such a believer in gold and silver moving higher ultimately because because of the devaluation of currencies and the amount of money printing going on and the deficits are gigantic right now after COVID. I have no problem. And you look at that chart. Yeah, the GDX bottoms at 16 in March. It goes to 45. So basically it almost triples. And it goes back to 34. It's a perfectly normal correction. And now everybody is panicking out of these long positions. Like someone like myself or yourself, who are both kind of these long-term bulls, we have no problems holding.
Yeah, and as far as the
through
indicator,
a consolidation.
yeah, in the daily stochastics on GDX is below 20. It'll go get above 20. It looks like on the next update, which would be a buy signal. And then the GDX to GLD ratio, it started to move up last week. When gold fell, the mining stocks went up Friday and Monday to say, look, we're coming into a bottom. And but despite that, you told me that someone told you there's people out there giving short sells calls on it, which seems really crazy.
Yeah, and again, when you look at that chart, even forget that kind of like panic selling in March, right? It's like, like the GDX, I don't know, like 26, 27, start the year, and it went to 44. So like, that's 17 points, and then it corrected, 10 points, which is like 50, 60% retracement. That's perfectly normal. And it just looks like to me it's about to take off again. And I think one thing that people have to realize, if you are a fundamental person,
Yeah, I lost you for a second here. Seasonally, too, gold tends to have its worst months in October, November, and then its best months in December and January, which seems to be playing out all over again. I think you're back. Are you back?
yeah, I'm back now. I'm sorry about that. But yeah. So what I was saying is the seasonals are there. And also, once I think Biden confirms the nomination, you're going to see way more talks, especially with this last round of, we're back in lockdowns in a lot of states. The economy is going to slow because of this again. You're going to see more of the talk of etc. happening. We're just kind of in this no man's land right now where, there's some debate over some of the results of the election. Trump is fighting it, and Biden's, I don't know, playing with his dog or something. So, and so we're seeing this going on right now, and we're kind of in between, the last administration probably leaving and the new administration staying or coming in, getting news on that fiscal stimulus front. But I think the dollar is anticipating some kind of big spending program. That's why it's devaluing. And once you see that announced, you're going to see these gold and precious metal stocks start to head higher. And like the chart you can show too is look at the RSI. Look at the.
Well, here's a chart, Dave, of the U.S. dollar index. It's an ETF UUP that tracks it, and it just went to a new low. As you're saying, the dollar is trading weak because of these programs that are likely to happen, and it just made a new low. What's unusual to me about this is that usually when gold corrects, the dollar goes up, but the dollar just barely went up at all. It just, from August to now, it just kind of floated, and there's no real rally for it. So it's really weak, isn't it? But another thing that was unusual about the pullback in gold is, as I said, usually the dollar goes up when gold pulls back, but also other commodities did not pull back when gold did. And other commodity stocks actually did very well last week. For example, one I own is Rio Tinto. Um, VHP is another one I own, and it's barely really all they did was pause near their highs. So the pullback in gold stocks and the metals in November was a little unusual because it seemed to be concentrated to only them, only a correction with them. So it wasn't a sign of some big massive change or some giant deflation or something, but it seems to simply have been seasonal trends or just for whatever reason, people, getting nervous about it, and that hopefully that's all over with. So I think you seem to be back now.
Well, no, I'll be fine now. What I did is I put the hotspot on my phone. It's right next to my computer, so
Okay.
I just yes. Now I'm going to be fine. And now I'll be able to do my own. Can I share the screen if that's okay?
I think so.
You have to allow me to do it. If you can't do it, that's fine. I just wanted to show a couple charts.
It should look good now.
Yeah, perfect. Okay, perfect. Here we go. So yeah, like if you go look at this here, and actually I think one other key thing is that I really think that is happening right now is I think that you are seeing this big breakdown in the US dollar and foreign currencies beginning to break out, you know? Like you can see this is the up here. This is the, we'll go back 10 years so you can really see it. You can see this kind of rolling over now. And, and look, we're only kind of back to where we were in 2015, 2016. And if you go look at, I mentioned this earlier to you today when we were speaking on the phone, that I went to Europe like 10 years ago. And I remember the euro being in like the 130, 135 range, which you can see here 10 years ago.
Yeah,
and now we're kind of breaking. Yeah, and if it breaks 125, the 2018 high, that's a massive base going back to 2015, and it should be heading higher, right? And if you go look at the Canadian dollar, that looks same way. Right? That looks like a really nice base since about 2015, 2016 has been forming, and now ultimately it will kind of head higher. So it just looks like this is going to happen. And one thing I wanted to show you is that what's really interesting about what's happening here to me is longer term. Is this? You can see the Canadian dollar here is that rally back here in the 80s. But what I really want to show is the U.S. dollar is that the dollar in that last phase of kind of the blow off of the stock market. Notice this huge decline that happened here, and maybe we're just starting something similar here. And the market, and actually that kind of happened too in the 02 to 07 rally as well. You have this big breakdown in the dollar, the market moves higher, and if you go look at gold, is that it kind of went down a bit. You can see 85, 86, and then rallied off the lows here, but really took off. And about the same time in 86, about that November, December period of 86, and blew off into 87. And I know that doesn't look like much on the chart now because gold is like, 1,800, but this was a big move. This was, 350 gold to, over 500 gold in like a year. So that's a 50% move. That'd be like us almost going to 3,000. So maybe we get this kind of last, I don't know, because the stock market was up quite a bit today too, but maybe it's like similar to 87 where the market's going up and blowing off, but gold and precious metals do even better. But the only issue with that is, just so you know, is the gold stocks, if there was some kind of major decline in the stock market later next year or 2022, they will probably be whacked with that. But I think unlike 87, because the government debt problem is so much worse now, what's going to happen is after that kind of decline, central banks are going to go even crazier printing money, doing all these things to bail the market. And so gold and precious metals, probably like this past March, we got whacked with the market, but then really, really outperform afterwards. But I still would think that if we were to get that kind of rally into the summer and everything goes up, you would want to sell some gold and precious metals next summer. But it would also mean we're just starting this huge rally. And the last chart that shows this is, again, this is the XAU. Look at the gigantic move. I just mentioned 86. 60 on the XAU to 160. More than 100%. Many juniors went up way more than that, 86, 87. So we could have a monster run headed for us here.
Well, that would make it seem that it's likely to go to the highs of 2010.
Yeah, I would think that that would happen if we got that kind of move. And maybe if there is some kind of crash or decline, it would be like that would be the sell off that resistance before the next move were to start. So I think too with the combination of the fiscal stimulus and this kind of exuberance. Remember, the new participants in the market are the millennials, right? The people that are trading these cryptos or the Zooms or these tech stocks and the whatnot. And politically, they tend to be more liberal or left wing, etc., like most young people are. So right now, and this is actually another analogy I'm going to use here, and I've talked to Mike. Is actually I sent the Mike this little book called The Short History. I recommend this for anyone of financial euphoria. John Galbraith. So, and one of the things he talks about in the book is that when you get these big booms and bubbles in the market, they tend to happen under Republican administrations, 29, 87, 2008, because Republicans tend to be kind of, more free market orientated. They tend to believe that these booms are going to last forever because they tend to be more pro-capitalist or market, et cetera, whatever the reason may be. But this time, I think what's going to happen is because the millennials are the ones that they're in the market really since that spring bottom. They don't know anything about the history of financial markets. They don't know the markets can crash, right? So they're exuberant about these kind of new technologies and tech companies. And because most of them tend to be liberal, they think the good times are here again because Trump lost. And then also when a vaccine comes out, there's going to be pent up demand. People are going to travel again. They're going to spend money again on the money that haven't been able to spend because of the lockdowns and the whatnot. So all of these things may cause this short-term boom, but because of the huge valuations and the overvaluations in the stock market, this may ultimately lead to a really, really bad decline. So it's kind of ironic where usually, again, it happens under Republican administrations and conservatives. I think now it's kind of this other aspect that is driving this kind of like phase of the bubble. And I think that is what might ultimately cause this to peak and drop. But what's really looking at before that happens is right now I showed the dollar rolling over. We showed, the gold has rallied and now it's bottom. Copper is now breaking out, nearly $3.50 a pound, the highest level since 2013. So you've got these base metals breaking out. You have many commodities breaking out. And I think there will be a massive stimulus. Even if the Republicans win the Senate, all it will take is one Republican to vote with the Democrats on stimulus, right? And I think that if that happens, you're going to see, again, more devaluation of the dollar, more increases in the base metals, precious metals, et cetera, and we enter some kind of period of inflation.
But the idea, the risk of a crash is something that is not going to happen this month or probably not even, going for the next 6 months or 10 months maybe. So really it's something not to worry about at the moment, but you got to be aware that it is risky. You can't just say, well, this goes up forever. I don't have nothing to worry about. Instead, you got to be prudent. It's going up high.
What? I think the real sign of that is, again, the market cap GDP indicator and the screen share. We can show this right now. Market cap GDP is 180%, which is an all-time high. It's even higher than 2000 when it went to this. So what you got to realize is the market has never been this overvalued. So that, again, this does not mean it's going to crash tomorrow, but it does mean that we are getting into ridiculous nosebleed valuations in the stock market, and you have to be aware of that.
Yeah, that is pretty crazy when you really see that.
Yeah, I didn't even know, by the way, I haven't checked that for a few weeks. I didn't even know it was that high.
I know.
I thought it was
know.
50. I thought it was like 150 or 160. I didn't think it was 180%. And obviously that will come down a bit because there will be growth in this last quarter as well. But that's ridiculous, man.
Yeah, but today Jerome Powell was talking at Congress, and when people see Jerome Powell, they say the Fed's there, they're my friend, and they can make it go up. And it crashed in March, but they came back for me. So don't you think they would come back and do things if it did crash?
I think that's the plan because I think it's really negative. And I'm not talking about asset prices or stock market. I'm just talking as kind of a big picture point of view that Yellen is now going to be the Treasury Secretary. And I know a lot of people are celebrating she's the first woman Treasury Secretary, but she was the Fed chairwoman, right? Yeah. So I think the problem is that they're essentially going to, the Fed is supposed to be independent. We kind of all know it's not, but it's supposed to be. But the fact that a former Fed chair, this is unprecedented, is now Treasury Secretary means that they want to almost like join the Treasury with the Fed, in my opinion. And when they run these big deficits or when there is a big decline in the market, they want the Fed to buy everything to kind of support, like the government deficits, the markets, etc. That I think is why that appointment is being made. And it's really negative in terms of the conflict of interest, the macro standpoint of the government, right, etc. It's not like, it's not like Mnuchin is great. He was a Wall Street guy, so he's definitely in there with the Fed too, right? But I think the negative part of this aspect, now it's very obvious that the Fed and the Treasury are almost going to be one entity, which means, like you said, after that happens, who knows? Because I think when that next decline happens, the country is so far in debt and the economy will be a wreck that you're probably getting to the real high inflationary type environment, and that ultimately is where we're probably headed. So that's the thing to watch out for. But I just wonder, because of the combination of another stimulus plan, some sort of vaccine, probably if you go look at these pandemics, they tend to last 12, 18 months. So probably the next 3, 6, 9 months is going to run its course anyhow. Because that's what's happened historically, and that pent-up demand kind of leads to like a mini boom, and then after that is when all hell could break loose because of how gigantic this asset bubble is, and that stock market to GDP ratio just showed it.
Yeah, it's. I didn't know it looked like that. It is crazy, but I guess now
I didn't know it was that high myself. That's insane,
So you're saying the danger period will probably be, once the lockdowns, the virus fades away, things pick up, there'll be a boom. It's after that moment that's when the risk moment comes. But until then, it would seem as if that the Fed action and Treasury action together that you're speaking about is bullish for everything, every financial market, everything.
Yeah.
Perhaps the US dollar, except perhaps
the thing about gold correcting and Bitcoin booming is, we talked about this earlier, is, like, how come copper's moving? Usually, gold can move on its own in a deflationary environment because it is considered as a kind of a hedge against bad times, right? So gold, like in the 30s, gold moved higher, but all the other base metals and other agricultural commodities moved lower, right? But usually when copper, iron ore, all these base metals are moving higher, gold moves higher. So why has gold been moving lower and everything else higher? I just think it was this stupid rotation where these idiots are selling their gold and buying Bitcoin. And I think the last few days, like today, we saw a big reversal off the 20,000 move in Bitcoin, and gold, was up almost $40. So now I'm seeing this where I think that kind of short-term thing that happened, where people selling precious metals, buying Bitcoin, this rotation has kind of ended. And I think gold, and to me, when I look at those charts, if I didn't know what those charts were that you showed earlier, GDX, GDXJ, GLD, I would think that that's like a big breakout followed by consolidation. And the fact that now this consolidation, by the way, has been almost 6 months, I just think the next move is going to be gigantic. Because I actually sold 25% of my gold stocks in the summer, and I'm just going to start edging back in now. And when I sold them in the summer, I was thinking like a 2 to 3 month correction. It's been 6. So I really think that we're headed for something big.
Yeah, I actually bought. I've got I got a lot of core positions and stuff that I didn't sell at all. But today I bought a little position in GDX because I don't really like that GDX as an investment. I rather own stocks. But I just thought, well, I'll just buy this and sell it in 6 months, for a trade kind of. But we also,
actually, by the way, oh yeah, sorry, go on. I think we're about to talk about the same thing.
oh no, I was just going to say we also own lots of smaller stocks, and the one I mentioned today was Inca One, and it's doing really well. But a lot of stocks are in good buy points because of the way they've been pausing, consolidating for several months. So it makes for a great entry point. But other than that, what are some of the ones you're really watching and really interested in right now?
Well, I like Inca One. Like you just said, it was up 18% today. Really look at that volume, fantastic volume. Best volume day since early August, right? So I like Inca One a lot. They actually have a mill that processes the ore. And by the way, if anyone's interested, Inca One is now starting to melt down and make their own coins. So you can go on their website, inca1.com. Actually, if someone were to write me an email, addictedtoprofits@hotmail.com or davidskarica@gmail.com, I have a promo code with Inca One that me and Mike are part of that you can get a discount. I think about $50 on your gold coin if you buy it through Inca One. So, if you're also interested in the physical, you can do that through Inca One as well. But the other deal right now I'm really excited about is the stock right now is called Victory Metals, but they're merging with a company called Nevada King. And Nevada King is the 4th largest landowner in Nevada. And only the big boys like Barrick, et cetera, are bigger. So they're going to merge with Victory. Victory has a rare earth metal project in Nevada as well. It's like a similar management team, so it's a very easy merger for them to do. So they're raising money at 55 cents. The stock is 63, so the stock is about 15% above that price. And then they're going to drill a couple of these properties. I actually helped sell Nevada King the Atlanta project, which was in Meadow Bay Resources, which has a nearly, I did with our friend Chris Coopey, unfortunately, this summer passed away. So we want to make this work in the memory of Chris. He was a great guy. Mike can adhere to that. But anyhow, Victory, this Atlanta mine has about a 500,000 ounce resource in gold and a large silver resource. And then they have other properties all over Nevada. So also for the big boys in Nevada, this is a potential takeover target probably at some point way down the line. This is very early, so not right now. But I really, really like the stock. And, this is actually monetary wise, like dollar wise, it's my largest position. And so, so if people are interested, you can write me and I can, get you into financing if you're an accredited investor. So, this I really like. And you can kind of see by the chart here, when it did go down, it went down on very low volume the last few days. It's right near its highs again. So I think the stock is heading a lot higher. And the thing about this group, Palisade Global, which is headed by Colin, they had a deal recently called Newfound Gold, NFG. I'm going to show you here. This stock has gone from just over $1 to over $4 a share, has a $600 million market cap, has done some great drill results in Newfoundland. So this group is really hot right now. And I think because of the success of Newfoundland, the Newfound gold, Nevada King will kind of ride the back of that.
Well, it's one I bought financing in it too. So I own some shares in Nevada King, and as you say, so it's sort of like merging with Victory.
Yeah, they're merging with Victory, and like most of the shares will be Nevada King shares, especially after it's financing. But the thing that's also great about this deal is insiders own a lot of it. So when you see the share structure of it and you go, oh my God, there's 200 million shares outstanding, it's really a lot lower like that on the float. Like it's probably maybe 50 million on the float. Like the insiders and the big firms own a lot of the stock.
Well, it's a small cap mining stock that just doesn't have one or two properties, but an entire package. That's why it's big.
Yeah, that's what makes it unique. Actually, I told you off air that's probably when they did their financing pre-IPO, it's probably the most money I've ever raised for a company. And I think it's because people saw that, like, hey, this isn't just some little 20-cent junior, with, like one property. This thing has multiple properties. And look, there's so many things you can do when you have a multiple property play. They can do joint ventures with other companies. They can roll out a property into a new deal. Then you get shares in the new deal. So, and then that is one of the safest, jurisdictions in the world. Usually Nevada corporations get a premium to their valuation because it is so, politically stable, safe, etc. So you get that as well.
Well, what I'll do is I'll put a link to your website. They can email you at addictedtoprofits@hotmail.com, right?
Yeah.
It's not .net, it's .com, right?
.com, yeah.
Yeah, Addicted to Profits.
That's Hotmail. I just use my Hotmail account for my email account, yeah.
So Addicted to Profits at hotmail.com. So we've been talking for some time, so I'll just let you, if you got anything else you want to add, just wrap up, I guess.
No, I just think that seasonally we've really finished, like the charts you showed earlier, we've really finished the kind of consolidation I was looking for since summer. It took a little long. Nothing, happens exactly like it's going to do. So I think we're really set up here for a big move in gold and precious metals. By the way, the RSI on the GDX was lower than it was, or just as low as it was during the March low, right? So wow. I think we're totally set up now for a large rally to occur over the next 3 to 6 months.
Yeah, I think this is going to be a great December. And one thing I'll add, one last thing, is that there's a Fed meeting. I think it's the 16th. And there were stories last week that the Fed wants to make even more dovish statements at this meeting because they're concerned about the lack of stimulus and want to make up for that. And they might talk about, they're debating what to say to be more dovish, but it should be very supportive of just more price gains. That's for sure. Well, thanks for talking to me and everyone else.
Well, last thing I'll say is they're going to have to do that with the market cap to GDP being 180%.